Hello, greetings, and welcome to Dividend Blasters. This is our 47th video, and the topic today, invest in Caterpillar. Caterpillar is the heavy construction equipment company. You see a lot of their tools on the road doing construction and road fix-up. So we're going to talk about Caterpillar as a dividend investment and as an investment. First, disclaimer, I'm not your financial advisor. Purpose of this video is for information and education. It reflects my own personal opinions, my research, and my experience as an independent investor for more than 30 years. Nothing in this video should be taken as financial advice. So please do your own research, consult a financial advisor prior to making financial or investment decisions. And before we begin, I'd kindly ask you to give us a like for the video. And consider at the end of the video subscribing to our channel here at Dividend Blasters and share the video with a friend or a family member. So, Caterpillar manufactures and sells construction and mining equipment, off highway diesel and natural gas engines, industrial gas turbines, diesel electric locomotives in the US and internationally. They've been around a long time. They were founded in 1925. They're headquartered in Irving, Texas. Caterpillar, or affectionately known as CAT, and that is their ticker symbol. They operate 5 different business segments. Construction. They offer asphalt pavers, and you've seen a lot of these on the road, compactors, road reclaimers, forestry machines, cold planers, material handlers, tractors, excavators, telehandlers, motor graders, pipe layers, compact track and multi-terrain wheel, track type, backhoe. List goes on and on. The other segments are resource industries. They provide electric rope and hydraulic shovels, drag lines, rotary drills, hard rock vehicles, tractors, again, mining trucks, log well miners, wheel loaders, off highway and articulated trucks, wheel tractor scrapers, and dozers. Okay, the list goes on. Let's go to the next one. Energy transportation. They offer reciprocating engine powered generator sets, reciprocating engines, drivetrain, integrated systems, solutions, turbines, centrifugal, gas compressors, diesel electric locomotives. Let's go to the next one. Energy and transportation. Financial products. Now, this is interesting. They provide operating and financial leases, installment sale contracts, repair, rebuild, financing services, working capital loans. So they have their whole own financing arm. And then they have this thing called all other. And this is really supplies and supplementary equipment. So things like filters and fluids, undercarriage, grounding engaging tools, fluid transfer products, precision seals, and rubber sealing and connecting components. So this is really all the stuff that you need to buy to maintain your investment in a Caterpillar truck. All right. So let's talk a little bit about the fundamentals. They closed Friday, July 14th at $258.49. Let me draw your attention to their PE ratio of 14.23. So I like to compare that to the Dow Jones PE, and it is less than theirs. Theirs is 2302, so it is much cheaper than the entire Dow Jones Industrial Average aggregate. The S&P 500s is just an eyelash under 20. So it is a, relatively speaking, better price investment. But it probably makes better sense to compare to competitors in their sector. And we're going to get to that. Let me draw your attention back to the right again. Earnings per share is a little bit under 18. The dollarized dividend rate, or the forward dividend rate, is 520. So that earnings per share is more than sufficient to meet it. Let's take a look at the forward yield of 2.03%. It is more significantly than the S&P 500's aggregate dividend level of 1.55, and it's approximately the same as the Dow's 2.07. Market cap 131.74 billion. So I like to look at total return, and I like to look at it over different timeline horizons. So for the past year, Caterpillar's total return, and remember, total return is price appreciation plus dividends, is 54%. So if you invested 1 year ago $10,000, that investment would be worth $15,404 1 year later. Now let's look at the max time horizon, and this is from Seeking Alpha. It is 30 years, and that max time horizon total return is 5,216%. So if you invested $10,000 30 years ago, that would be worth $531,688. That's a tidy sum. Let's look at their dividend grades. And this is really a summary. You see a lot of green. Dividend safety, they get a B plus. That's because the payout ratio is safe, 30%. So that's basically dividend payment over earnings, and 30% is nice. You typically don't like to go over 60%. Dividend growth, A. Look at that 5 year CAGR, 9%. I'll tell you, I like that. And let me just step back a little bit. I typically like, and a lot of us dividend investors like to see at the aggregate level a yield plus a 5 year growth rate of at least 10%. Well, here we're over 11. We like to see the CAGR or the growth rate more than the yield, because we know that if the yield is too high, there may be a risk that they may not be able to maintain it. Last thing you want in an investment is for them to cut the dividend. You never want that. The dividend yield, they get a B. That's pretty good. That's the 2%. That's fine. Dividend consistency, A plus. Why do they get an A plus? Look at that streak, 29 years. They've been increasing the dividend for 29 consecutive years, more than enough to be a dividend aristocrat, which is 25. They are a dividend aristocrat. 29 years. Nobody else in the sector has matched that. You're going to see that. Dividend growth grades, A. Okay, you do see some yellow, but you see a lot of green. I really like to see the earnings before income tax, depreciation, and amortization growth. A, 20%, more than double its peers. Look at the log of unadjusted stock price, 5.451, more than its sector median by far. I also like to look at those dividend growth rate CAGRs, especially the 5 year CAGR and the 10 year CAGR, 9%, 8.72% more than its peers. Who are its peers? Well, look, you can see right to the right of Caterpillar, you have Packard Industries, you have Volvo, Cummins. I see Cummins on the road sometimes. Daimler, well, that's the Mercedes-Benz company, and Komatsu, they're the Japanese company. I would say quick takeaways. The largest number of employees employed is by Caterpillar, 109,000. Daimler is 104. I will tell you that I do like they have the largest market cap by far, 131.74 billion. Nobody's close. This is the biggest, most significant company in the sector, Caterpillar. Total return. Well, let's take a look at total return. Total return over 30 years. Caterpillar, as I mentioned, is about 5,269%. Anybody more? Well, Packard's a little bit more, 7,501%. But I'm going to tell you this. I did some research, and most of their return, Packard's, is price appreciation. It is not quite as much dividend. Okay. More of Caterpillar's is dividend. All right. Let's take a look at dividends. Okay. Consecutive years of growth. I'm looking right down from the bottom up. Caterpillar, 29 years. Packard, 2 years. Is anybody else close? Cummins is 17 years. Let's look at those CAGRs. Well, I would say that the 3-year CAGR and the 5-year CAGR for Caterpillar are better than PECR, better than everybody's. Let's look at the forward yield. Well, it's better than PECR's, 2% versus 1.26%. Um, some of the other yields are better, but you know what? The strategy here is to have a slightly lower yield and have a better growth rate. And that is where Caterpillar is making it up. They're making it up with that growing dividend. You want to see that growing CAGR, and that's where they are making it up. Now, you know what? When I dig a little deeper, I'm going to be looking at the income statement, the balance sheet, and the statement of cash flow. I want to know that I can see significant, substantial growing revenue and profit, and cash flow and manageable debt levels. By far, Caterpillar has the largest revenue. By far, they have the largest net income. Net income 7.11 billion. Anybody close? Nobody's above 3.72 billion, and Packar's 3.14 billion. Gross profit, they are at, they being Caterpillar, 17 billion, and one of them is at 11 billion. Net income available 7.11 billion. That is Caterpillar. Caterpillar takes it. Let's look at the balance sheet. So here I'm going to be looking at things like uh, debt over free cash flow. And I'm also going to be looking at some of the ratios. So I would say that debt over free cash flow, I want to see a low ratio, and I don't want to see a negative. Okay. Caterpillar has that best ratio of 12. Packar's is 172. Next one is 38. Next one is, Cummins is 68. And then you got a couple of negatives. That's really all I need from this. It's Caterpillar. Let's go to cash flow. Well, let's look. Let's look at levered free cash flow. Caterpillar 5.4 billion. Cash from operations 9.03 billion. Let me just, for definitional terms, levered free cash flow is cash flow after all your debts and expenses are paid. Okay, so that's really a key metric here. Levered free cash flow. Is anybody close? No. No. PACCAR is 121.5 million. Next one is 1.19 billion. The rest are in the millions, and Daimler and Komatsu are negative. So I would say it is Caterpillar. The case is strong. The case has been made. So that's it. This is a shorter video, more to the point. I would kindly ask you, give us a like. And if you feel so inclined, subscribe to our channel here at Dividend Blasters and share this video with a friend or a family member. And until our next video, have a wonderful, wonderful day, and God bless.